All right, everybody, welcome. Really looking forward to a nice conversation. My name is Glenn Rosenberg. I'm COO and Head of Revenue with ML Tech. We're a multi-manager, multi-strat investment company, and I want to start off by pointing out the contrast between my background and Dan's background. So I'm in Connecticut. We're starting to hit winter time here. I'm all layered up and got the heat going on, and Dan is in Dorado Beach and looking tan and nice. So a little bit of contrast to kick off the show. Dan, why don't you just kick off real fast with a little background on your side, and I can do a little bit of mine, and then we'll dig right into it.
Sure. So I run 10T and 1RT funds, and I'm also chairman of Zenrock Labs. So we are the only growth equity fund in the world that is exclusively focused on crypto, Web3, blockchain, digital assets, however you want to call it. We've invested in 24 companies, $1.5 billion AUM. I've got board representation on 12 of those companies. And I think we're unique in the space. Most of the other funds are venture funds, and they're making seed and pre-seed investments. We actually focus on companies generally that make 40 to 50 million in revenue or more. Sometimes it's a little smaller, but usually we make an exception every once in a while. But and in this way, we take some of the risk out of investing in the space. As you know, even as a Bitcoin holder or ETH holder, every 3 years there's a 70 to 80% correction in the market, and very difficult to hold through, at least on a long-term basis, to hold through investments. And so in 2019, I had this idea really of owning the larger, more developed companies, private companies that were in the space. And actually, I wanted I was looking for someone to invest in and couldn't find anyone myself. And so I said, okay, well, why don't I start up a fund that makes those type of investments? And so it's really been, we've grown and spread out and moved on from doing just growth. We do that. But our most recent fourth fund, which was closed, is a special sits secondaries focused fund. That's going to be about 80% allocated, by the end of December. And then we've also, because of the skill set of the partners, there are 5 partners, are actually operating one of our businesses that we bought out of administration. And so, I don't want to say we're traditional private equity fund because there's nothing traditional about what we do. But if I think about what private equity funds do in the old world, I would say that we do that and more in this new world. And, I was 25 years in the hedge fund, macro hedge fund business before, and worked for some of the well-known names out there. I started my career in the early 90s at Tiger Management, and then worked for Michael Steinhardt, then was at SAC Capital for 10 years and ran macro investment there, and then went to work with Stan Druckenmiller at Duquesne too. So that was a 20-year period where I was managing money, but also coming up with investment ideas. I've started 2 businesses at the same time. And so have a very eclectic investment approach, I would say, but it's driven by structural macro changes. And I started in this space in 2013-14 was my first entry into this. I had a physical gold. I still do a physical gold sales and storage business called GBI, Gold Bullion International. And in 2013-14, we integrated with a firm called BitReserve, which today is the Uphold wallet. And we were the first place in the world where you could buy or sell gold to buy or sell Bitcoin or Ripple. So that was my first introduction, but I didn't really get into the space, full time until really 2019. And then, here we are today. And I've been a big Bitcoin proponent. And also, I think ETH and Solana, are
Solana all-time highs again.
I think those are the core assets of the space. So I'm sorry I went on a little bit there, but
that's okay. Well, let's take a pause. I think there's some interesting contrast here. That I'd really like to touch on. So I also have a traditional finance background. was a relative value options trader. I worked in some of the big firms as well, Bear Stearns and AIG. I used to talk to Dan Moorhead back in the day when he was at Tiger. Maybe you guys overlapped a little bit. Same kind of background. And so we're trying to see how we can shift that overall thinking and that kind of structure that we know into this new Web3 universe. So for me, it's kind of easy, right? I mean, I'm an RV trader, quant. What we do is we do quant trading strategies, statistical arbitrage, momentum CTA strategies. There's a lot of opportunity on centralized exchanges to pull out alpha from all of the inefficiencies in the market. That's kind of easy in a sense, right? I mean, that generate alpha in the space versus equity and foreign exchange is a relatively simple task. I think relative to what you do, where you've got to really source long-term value in companies that are going to be the infrastructure and the growth of what we're building. So I think that's the kind of contrast that I wanted to point out and to kind of learn more. And I think the people watching want to learn more about like the investment thesis, right? So just as an example, when I think about Web3, and just, a quick, by the way, when I first came into crypto in 2017, it was opportunistic. I mean, there was trading opportunity to be had, and that really was sexy to me and really something I wanted to latch onto. And then I started to build the Web3 narrative as I went. And one of the things that I kind of am curious about, and I'd love to hear, your thoughts as the expert, is like, how do we scale this into a real consumer model so that this is available to everybody in a global sense versus kind of, if I'm understanding it correctly, versus more segmented in a way that kind of hits certain targets, but not all targets, if that makes sense. And then how that weaves into like your thesis for the coming year.
Yeah, I mean, look, I think that, that it's a sprawling question. I would argue that sort of generalized consumer adoption, if you want to call it, that has happened already in some places and not in others. Just as an example, I mean, I think people often forget outside of the U.S. That cryptocurrency acts as a lifeline for people in many emerging countries where fiscal and monetary policies are terrible. If in Argentina now they've I think are going to be adding Bitcoin to their reserves. El Salvador has done that, but 80% of total world cryptocurrency trading volume is done outside of the U.S. And just think, look, we have the dollar; it's stable. We have a proper Federal Reserve. Our fiscal policy, even though people are complaining about it, is relatively balanced, and that's compared to the rest of the world. So you have places like Brazil and Nigeria and Turkey, and they are much more comfortable and facile and have moved way down and are way ahead in terms of adoption, not just in Bitcoin, but also in stable coins. The stable coin business, which 3.5 years ago didn't exist at all, this year there's going to be over $10 trillion of stable coins settled. So for many people, their digital wallets are their bank account. It is their payments account. It's just that in the U.S., we don't really, think about the devaluation of our fiat currency, right? Like, I mean, we feel it a little bit via inflation. In other areas, like I would call, media and branding, the NFT space, I think has made some progress there, but I don't, I think it's still, this idea that all things of value, whatever they may be, will eventually sit on a blockchain has, penetrated certain places, not others, right? So what do I mean by that? There's a new area just this year that I think has begun to get momentum, the RWA space, real world asset tokenization. As a traditional guy, I'm sure this resonates with you. Like, why shouldn't all my assets, everything I have, and all my real assets be fungible, sit somewhere digitally, right? And so this has just sort of started to take off in the last 6 to 9 months. You have treasuries that were tokenized, BlackRock, and I think even Apollo have made some inroads here. Securitize is an indigenous company that's made some good progress. So when you talk about adoption, there are all sorts of different, it's very uneven, is what I would say is the application of the blockchain technology to many different areas of our life and the economy has just been very uneven.
So I think that's,
Yeah.
no, that's good. I mean, so I think there's like really three pillars here, right? That we could focus on and maybe take a little bit of a deep dive in how that's going to affect all our lives going forward. So the real world assets, putting everything on the blockchain, it's a fantastic use case. With regard to underbanked people, remittances, I think is another huge case. I mean, why use Western Union and pay that fee when you can have something hit your wallet in 10 minutes and send it to your family, in a country half around the world? And then the media component. And so maybe we can spend a little bit of time on each of these pillars, but starting with the media.
I mean, there are more. I mean, I just threw
these are just the first three that came to mind, I guess, right?
out of a hat. But go ahead.
Yeah. Well, I
I'm
mean,
happy.
if you want to hit on some other ones first, or we can dig into these. Maybe we just do one and then expand the universe.
Well, I mean, I can give you an example of something that's happening right now. One of our companies was a smaller company that we made investment in the third fund. In our third fund, we had a special sleeve for blockchain gaming NFTs, metaverse, and we invested in a company called Doodles. And Doodles is really, I had this idea that Doodles and Yuga, the PFPs, people, sort of made fun at. These are communities that are brought together by, the ability to own pieces or characters or be a part of a network of a brand. And Doodles, just a few days ago, has now come out with a partnership with McDonald's, and there are 100 million cups now in McDonald's across the world that have Doodles characters on them. And so the ability for, one to be able to own one of those characters is pretty interesting. I can't remember what the fee structure is, whether you have, as an owner of one of those characters, there's an NFT that represents that character. It's sort of like, you may say, like, well, what does all this mean? Sort of like if you think about Disney characters being able to, let's say, own the rights to, Mickey Mouse, or you've bought the original Mickey Mouse, and every time Mickey Mouse gets, shown out there, you get some small fee. This is sort of the concept of not just the digitization of money, which is what, crypto really is, but the digitization of even abstract things, ideas, and characters like this. And so I think that in terms of reaching a whole new demographic, McDonald's has been quite smart in partnering with Doodles, and you can just Google it and take a look at what they look like. And
I'm looking at it on your website.
Yeah, and the NFTs, have, I think, gone up 200% in the last few weeks. The NFT market's been actually moribund for the last 18 months, but I think that the concept of a non-fungible token, NFT, and to give people ownership rights of digital assets, whatever they are, I don't think that's going away. And
So McDonald's is a really good example. What about elsewhere? Like, I could see a lot of like the big corporations of the world, the Walmarts, airlines, all putting their reward points and everything into a blockchain and making that more fungible for people, and then building, kind of a network around that. I mean, do you see a network effect there, and does that affect what you can invest in, or is that more kind of separate out from like what the big companies control?
No, I think that, look, the big companies have big businesses that they focus on, and they can't do everything. And this is a complicated world a little bit. It's not that straightforward when, when you, meaning it's a difficult transition to go from selling burgers to understanding how to build community in this new digital asset. And I think this was the right move for them. You partner with people who do this all day, and you get access to a whole different demographic, people under the age of 35, people who, spend much more time online in these online communities, let's say, You know, this is a very small part. I think the total value of all the NFTs today is like less than $10 billion. I even hesitate to talk about it compared to something like the stablecoin business, which I think is really people are really starting to say that this is the primary use case for blockchain, to allow people to have digital savings without, an intermediary. And I think this administration also is very interested in having, I would say strong regulation, but or obvious regulation, not on top of regulation, but around the stablecoin business, because 99% of the stable coins are dollar denominated, right? So there are really no euro or yen or other currency stable coins. I think it's in the US's advantage to encourage the growth of stable coins here in the
You
US.
think governments ultimately digitize all their currencies, and could that potentially?
That's all happening. Yes, all currencies will eventually be put on a blockchain. Everything will eventually be traded on a blockchain. Settlement becomes instant. Everything becomes fungible with everything else. I think
What does that do to the stablecoin market that we have today?
well, I think I think it becomes hundreds of trillions of dollars. The currency market that I think trades like $7 trillion a day, and there are only really 15 or 20 currencies. The blockchain, the application of blockchain tech to currencies. Potentially you have every single country with a currency on a blockchain. It could be on, who knows, maybe it's on the Ethereum blockchain, maybe it's on Solana, maybe somehow it becomes something on top of Bitcoin, layer 2 on top of Bitcoin. So I think, I don't see how the system of trading and payments, because that's our background, I move into that, will stay the same that it's been for the last 30 years. I just don't, it's already moving in this direction. 3 years ago, if I think about how many TradFi players there were in the space that even allowed, let's say, were even interested in custodying your digital assets, it was a very limited number. And now they're all falling over each other. Schwab, for instance, we just saw yesterday is going to be allowing trading, and I think they're going to be custodying their digital assets for their clients. So I think that's the big picture. If you think like, where is this all going? I would say, and why is this important? Well, you have the internet. Internet was the digitization of ideas and information, and crypto, blockchain, Bitcoin, this is the digitization of money, but all value. So I think all value will end up sitting on a blockchain, and it'll be fungible. And what that means is, you'll be able to trade, your house's value will be on a blockchain, and you'll be able to trade that for Bitcoin, and then you'll be able to trade some of that for, ETH or something else. And then maybe you'll want to, you'll want to move around other value that you have in your digital
Use it to
wallet.
collateralize loans in these assets as well.
Everything. I think the lending business is going to be a huge business. The borrow lend on Bitcoin. We have a company called Ledin that's sort of the only centralized lender that survived the FTX and 3AC mess in 2022. They just are having a record quarter. And it makes sense because Bitcoin holders don't really want to sell. So you're sitting there with your Bitcoin, and maybe you want to buy an apartment or something, but you don't want to sell your Bitcoin. So these are the strongest, holders out there. So, you can borrow against your Bitcoin, with Ledin. I think that's going to be a huge business. I also see traditional guys probably moving into that space as well. But it's not that straightforward. If you've been in the old world and you've been making your money in that old world, and your business is decent, but maybe not dynamic and really growing. It's hard to just, presto, move into the digital asset. So I think some of the companies that we invested in, they're prime targets for takeover or eventually maybe going public or maybe M&A.
It's
Because I
easier
see
to
the two
buy
worlds
versus
coming
build in a
together.
lot of this.
What's that?
It's easier to buy versus build in a lot of this.
Yeah, I see the two worlds coming together. I mean, some people in the digital asset world, think that it has to supplant the old world. And I don't really see that. I sort of see the two worlds coming together. Some people have the idea that equity won't exist in the future, that all things of value, if they'll be tokenized. Even equity will be put on a blockchain. People won't issue equity anymore. I don't really think that that's anything that I see in the foreseeable future. There's a lot of governance and there's a lot of legal precedent around equity that doesn't exist at the moment around tokens. But this
The
administration,
token just become a different form that represents equity.
yeah, maybe. I think we're going to get a lot of clarity over the next 4 years. I'm not sure people outside the space really understand the degree to which things have and the speed at which things have changed. Gensler finally announced that he's stepping down and Ripple is up 30% today. That's now a 60, 70, $80 billion asset.
That's interesting too, because it's not finished in the courts. It's still going to be appealed. So it's not over, but we certainly had quite the move today, no doubt.
Yeah, I mean, I think things have been moving up over the last few weeks based on the expectation that Trump had said early on he was getting rid of Gensler. But it's really been a very hostile environment for crypto businesses, for people
regulate through litigate
space in the US specifically. And the SEC was suing Coinbase. I mean, it's ridiculous. And now Trump has invited Brian Armstrong, who's the CEO of Coinbase, to the White House, to talk about appointments. I mean, it's incredible. The 180 degrees, the speed of it. You have, the richest man in the world, Elon, who's also crypto, friendly, the president, everyone in the cabinet, the vice president, many members of Congress, all of a sudden super pro crypto. So I think the US now really has a chance to become a real hub for crypto in the world. And it just, a few months ago, people were, under attack. And now it's the opposite. So I would look for accelerating levels of adoption. And I think investors really need to sit back and think, what kind of allocation they should have to the space. I think minimum now it should be at least 5%. And I always say you should have a little Bitcoin, a little bit of ETH, and then you have a little bit of a venture fund and a little bit of maybe a later stage fund like ours. And you decide how to chop up that exposure. We have over 300 investors in the fund. I've told every single investor the exact same thing. I don't say, give me all your money. I said, this is the best way to maximize your exposure in a way that, over the next 5 to 10 years, you participate in this growth of this new world.
So going into 2025, and what you just laid out is a super optimistic environment, which is fantastic. I think we've all in this industry have waited a long time to get here. So it's nice to see that curve.
And it's been painful for many people.
Right. Do you have any particular investment thesis that you want to execute on in the next year? Or is it too diverse to kind of pinpoint into something so narrow that's,
we're very opportunistic. And my general idea is that I want to invest in businesses that are, in a way, budding conglomerates in the space. I tend to, opportunistic also from a valuation perspective. This space in 21 and parts of 22 got really crazy and companies were trading for 50 to 100 times revenue. And one of it's funny, I'm in this growth space, but I still have too much of a value bent. I mean, I really hesitate paying anything more than about 10 times revenue, which already is generous. So we didn't really suffer in the bear phase. Our strategy outperforms in bear phases, and then we'll underperform a little bit in bull phases, because we're not taking that kind of risk. There are venture funds that are trying to make 20, 30, 40x. Our focus really is to make a 5 to 10x on the portfolio, but over the 10-year life of the fund. And so I think if you're going to hold an investment for 10 years in the space, you're probably going to have to suffer through 3 bear markets. And that means a 70-80% correction. And that's tough. That's really tough. And so you want to have a diversified portfolio. We diversify by buckets. We're geographically diversified also, that can withstand that kind of volatility. And so we have companies actually that make very good money even during bear phases.
Well, I guess you have to throw out the old school valuation models. And do you even put something specific together? Or is it just so bespoke or
No, we do a lot of traditional modeling and cash flow analysis. We probably have 10 different ways that we will attempt to value a company. But again, since I'm looking at companies that are more developed, it's a little less, it's a little bit less sort of finger in the air venture stuff trying to hit some home run. We have companies making hundreds of millions in revenue, some cases billions. And so I think our main play and belief is that in the next 5 years, there's a very small chance, very small, that there will only be 2 or 3 large crypto blockchain public companies. And today we only have Coinbase, which is at around 80 billion, and MicroStrategy, the same, around 80 billion, but I don't know if that's as much an operating business today as a Bitcoin play. And then Galaxy, which is around 8 to 10 billion, which is, a diversified sort of broker in the space. Our big picture view is that there are going to be 40, 50 plus companies that are private today that will end up being public in the next 5 to 10 years. And the growth and revenue production capabilities are tremendous for some of these companies. So
now, as we grow out like the Web3 universe, do you have any views on private chains versus public chains, kind of who dominates that space and how you move in that area?
Yeah, I think it's a mix. I believe that you have that there will be this multi-chain world. You have different use cases for different chains. You have L2s on certain chains. I think private blockchains, can serve their purpose. I don't know how they maintain value over time, but maybe that's not the point, right? Maybe the point is just to have a blockchain so that maybe there's a smooth transition into to have something that's exchangeable or tradable for something that's a public blockchain where you might have value accruing. Right?
And does interoperability become less important then?
Well, for that private chain, yes. Yeah, but I think you're not going to have one monolithic response to the application of blockchain, right? There isn't just going to be one way to move around value in this world. And so we don't really get involved with private blockchains. JP Morgan, of course, is, the most, probably the private chain that has the most activity on it. But so we don't really get involved with that. But I see that there's a use there.
Okay, well, we have one question that just popped in, asking if you have a preferred product, like a platform or a fund, et cetera, to generate passive income on your holdings.
We actually do. Zenrock Labs is coming out with a product called Zen BTC, which is a decentralized yield-bearing wrapped Bitcoin. So if you are active in the DeFi world and you have a digital wallet and you're active, you'll be able to buy Bitcoin in this format It's decentralized, which means that it's not custodied in any single place. And this product is completely new. You can, look at it. We have a website, Zenrock Labs, is MBTC, and it'll yield a few percentage points. I'm not exactly sure what the yield will be, but and it'll yield those percentage points in sats, in actual Bitcoin.
Interesting. Okay.
Yeah.
So, I know you obviously travel the world and hit the conference circuit and reach out to current and future investors, as do we. And, I've been going to some of the more traditional style events like an iConnections, which has traditionally been solely focused on the traditional markets and alternatives, obviously, but crypto becoming a much bigger part of that. And over the last year, the different conferences I've gone to, more and more of the percentage of not just the alternatives, but the overall managers and attendees in the conference are becoming from the digital asset space. And so I find that very interesting. I'm curious what trends you see in adoption from some of the more traditional family offices and investors who are looking to find a way to access the space.
Yeah, well, we have institutional investors. Texas Teachers Pension Fund invested with us, the Michigan Pension Fund MERS. We probably have, I don't know, most certainly over 30, very large family office, just, multi-billion-dollar family offices that have invested with us. I think there's a little bit of a lull in 23, and some part of end of 22, 23, and a good chunk of 24. There's a little bit of a lull from investors in my space, in my area, especially the FTX debacle. I think hurt a bunch of traditional growth equity investors, so they've been slow to come back. But I think, look, Bitcoin at 99,000. I don't know what more.
What more proof you can take, right?
Yeah. So I suspect things are going to be pretty rocking and rolling next year.
So to better understand your funds, you said this earlier, but just so I have it, you have 4 funds, 3 are closed and the 4th is open?
No, they're all closed.
Okay, and are you going to create a 5th fund then?
Yeah, and we'll start the marketing for it in January.
Okay, so start right off the new year, marketing a new fund and grow and what is your goal for that, or is that not something you share?
I think we'll focus at the start, probably at around 200 million, and it'll be a diversified portfolio of private companies, but we also thinking about adding a sleeve of what I would call growth tokens, not investing in certain tokens that where there's real revenue behind them. And there are quite a few of those, and they're not valued in a crazy way. So that's something we're entertaining. We'll be looking also, to invest in companies that we might be able to really help on the operating side. And then we expect that the growth equity world will come back. There hasn't been really a large growth deal, probably in over 18 months or so. $100 million raise for $1 billion company. So we think that'll come back. So I think we have lots of different ways to win and add alpha, but then also have beta. We want to be correlated with Bitcoin in the space, but not like so strongly correlated that you might as well, you could just own Bitcoin. I already sort of explained how I think, what I think is the best exposure, the best way to get exposure, through Bitcoin ETH and then a little of a VC and a growth fund.
Mm-hmm. And just manage that dynamically, I guess, as the market shifts somewhat.
Well, no, what we'll do is we'll have different buckets. We'll have an allocation, a clear allocation to each bucket up front. And the token sleeve wouldn't be more than 10% anyway. I mean, I don't. It's just about adding a different exposure rather than, active trading. I don't think that's the business we're in really.
Got it. Okay. Any other final thoughts going into the new year?
I just think this is, the acceleration part of the bull phase. Bitcoin, I think, can head up probably around, another. I wouldn't be surprised to see it head up to somewhere between, 160, 180. Beyond that, I'm not really sure. ETH probably to 10,000. I think we have multiple still in Solana as well. So this is all coming, and I think you're going to start to see some of our companies. I mean, the third fund has an 8% position in Circle, which is the leading stablecoin business in the regulated sector.
Yeah.
And they've already announced that they're going to IPO. So I think you'll start to see some of our companies, go public as well. And I think that it can't be that the entire equity universe only has, 3 companies to invest in our space. The value there is $4 trillion today. All the cryptocurrency is about 3.2, 3.3 trillion. And then all the equity, add that up, maybe another trillion. So you're looking at $4 trillion of value in this space. And there are only, 3, I'm not including the Bitcoin miners. There are a few public Bitcoin miners, but only 3 companies really of size. That just doesn't seem right.
Right. Okay. Well, we are coming up on the end. We did kind of slide in like 30 to 45 minutes. So this was certainly very enlightening for me. I really appreciate your time, Dan.
Sure.
And I've already asked you one final thought, so I guess we can call this a wrap.
All right. Well, nice
Unless you have
chatting.
anything, I mean, I turn it over to you. I don't want to,
No,
we can keep going.
I'm good. I think, we covered a lot of stuff, and I just, I think that if you're from the traditional world, I think the question you're gonna, ask yourself over the next year or 2 years, is, can I afford not to have some exposure? And now look, you can do it easily with a Bitcoin ETF. And if you say, look, I don't want to be in a 10-year life fund, I don't want to have access to these opportunities or to the kind of opportunities that you're involved with, it's very easy. I would say, fine, just do that. But then be prepared to sit through tremendous volatility up and down, which suits some people, doesn't suit other people.
Well, I guess it, leads to another question. I mean, we can always just keep iterating and doing this forever. I'm just trying to manage time, but I know your investable period is really a 10-year period. So I think that's really important to know. I mean, we've been at this business now for, I don't know, close to 13, 15 years almost. Where would you say, like, if you think about the slope in terms of like the maturity of the market, I mean, on the 0 to 10
It's
curve,
still early because there are too many people who I speak with who I think will be involved in the future and who are not. It's still early. And I think the volatility keeps a lot of people away. And the complexity of understanding how the blockchains actually work, I think that also scares people.
I think that also
Now you've got the
inhibits
ETF, and once people they dip their toe in, they buy the ETF, they start watching it, then they start thinking, okay, well, there's an ETH ETF too, and like, what is that, and why is that different, and what is going on in this? And whoa, there's $4 trillion sitting here. How'd that happen? What is it doing? And then the next thing is they come to us, and we actually act as a bridge, I think, to the traditional world. We spend a lot of our time educating people about like just how things work, where the value is, what the future is going to look like, and we've had a pretty good call. So
yeah. Well, I guess,
that continues.
one more then in terms of like the user experience, right? So we talk about the complexity in the market and people understanding the blockchain and all of that. And do you think there's still a very large education hurdle for people coming into Web3?
Very.
Right.
You got to do the work, and it's hard, and you need a guide. And we guide, people, but we also, want to be smart about our investments. So, you can't spend all your time educating people, but I do things like this and podcasts. We have a webinar series with our company CEOs. You can see, yesterday we had one, we had a webinar with the CEO of QuickNode, which does API and node infrastructure. I mean, do people even know what node and API infrastructure? I mean, like node infrastructure, what does that mean? Why do we need it? So it takes some work, right? But I think it's dangerous not to have exposure as an individual or institutional investor here.
5%.
Yeah. All right. Well, it was great chatting. I enjoyed this. Are we ready? We good?
I think we can wrap up. Thank you so much. I think this was super enlightening. Really appreciate it. And let's call it a wrap. All right. Good weekend, everybody, and bye for now.